In this video, traders, we're going to look at if you've missed a trend day move, what are your options in the next day, 2, 3, 4 days after that initial trend day move. Stay tuned. Hey traders, warm welcome to you. All right, so not all of us are sitting in front of the screen all day long. You've got other commitments. Perhaps you're a swing trader, perhaps you're an active day trader, but you're not sitting in the screen all day long. And you want to have a strategy or a setup or a way of taking advantage of a trend day after the fact. Now, I'm not talking about having a hindsight crystal ball and going, oh, well, I would have just placed a buy order there and a sell order there. No, we're talking about using and leveraging on the volatility and the movement in that trend to get a much better opportunity on the subsequent days that follow. So we're going to look through some ideas and some ways to potentially frame the trade, frame some ideas after we've had a good trend day in whatever market that may be. Now guys, this video is sponsored by Core Spreads Australia. There's a link to them in the description below. Go and check them out. Go and check out their spread trade offering. Go check out the Core Trader 2 platform, open up a demo, have a look around, look at the tight spreads and look at what you can do with them. So let's have a close look at what we're going to do. So in a trend environment, a classical trend day would be kind of defined as something that closes in the upper half or the upper 10%, should I say, of the move. So you've got the low to high move in an uptrend and it's closing in the upper 10%. Now, you can be a little bit flexible with that. You might be able to say 20%, depending on what type of day it is. And if it's been so strong and it's pulled back, 20% or so, it's not the end of the world, it's just a little bit of unwinding. So you might want to adjust that, but let's just keep it as that for now. So you're looking at going from low, really most of the time the first 5-minute low is not taken out, or it's literally the opens the low, pushes up, closes at highs. That's your defined trend day, regardless of what market we're looking at. Could be FX, could be looking at currencies, FX, stocks, indices, name it. And then what we're looking for is to say, right, what's going to happen, or what are the options in subsequent days? And the good thing is that you can scan for stuff like this. So if you're scanning a universe of stocks that are good liquidity and are available on the platform you're trading, you can literally then don't have to be there and you can say, right, I'm really going to trade on day 2 and day 3 after I've had a significant move. So let's have a look at some of the options or some of the potential setups that we might have. Again, this is not me recommending anything. It's just highlighting some of the things that maybe you could look a little bit deeper into if this kind of ticks the box of the type of trades you like to take. All right, so let's assume we have day 1, we've closed in top 10%, tick, we've got a trend day attribute. So the next day we can have a couple of different things, and it's going to depend on what this day 1 was. In other words, was it an initial day 1, i.e. it came from nowhere, we'd been sitting around doing nothing, and all of a sudden we had bang, we had a catalyst, we had some volume, and it was like a strong first day of a trend? Or was it maybe the 5th day or the 3rd day of a strong move? Maybe we'd had multiple days of move and this was another trend day. Now that's going to very much affect potentially what's going to happen on the next day. So let's assume for now that it's the day 1 of the move. If it's day 1 of the move and it's closing at highs, what we're going to be looking for is at least a retest of the prior day's high. So in other words, if we opened here, there's the high, and if I'm talking about an index for now, for example, talking about if we're trading a cash Dow or something like that, as we open up, we could dip lower, and any kind of low bottoming pattern in the first hour of the day can often be bought for a further pushback up and a retest of the prior day's high. So often we get a little bit of a gap lower actually sometimes on a trade after a big trend day, because sometimes it's a little bit gap lower and it kind of shuffles down, does a little bit of trade, and it's almost like supply demand, seeing if there's any supply there, no supply, and then you get like the continued demand that's pushing in. You also get and it also helps a lot of people, because a lot of people have taken home shorts, they've been on the run like that, they've been shorting all the way up, closes at highs, they get a little bit excited when it starts to dip down here, then when it doesn't, it starts to kind of push up and pick up steam. It's not going to be that aggressive normally, it's normally a chug, but very often it'll go and it'll retest, maybe pop through, because a lot of people have stops over there, and then it might kind of chop around, maybe drift lower, maybe drift higher. So after that, you're not that interested in it. It's that initial drift lower, pause, some kind of double bottom, some kind of fake out, some kind of high low, that kind of thing, pushing back up to retest the prior high. So that's normally a high probability type of trade. The other one is that you would get this kind of scenario. So if again we're on day one of the move and we've had a big trend day out of nowhere, so to speak, then this is often the case. We'll get a dip lower like this, and then we'll just get strength and continued follow through on strength, and you'll get a day two. So you're going to get a nice solid green candle on your daily chart. And that obviously very much depends on where that trend's come in, the position of that trend, etc. Loads of things. Was there a catalyst? Was there a reprice scenario, etc. So you might well find that there's follow through, but very often, again, as with this pattern, it's super similar, except with this pattern you're looking just to kind of scale out and a scalp trade in the high retest. This one is looking for further follow through. So if you're kind of chopping and changing between the two, not sure which one to do, perfect to be able to scale, to be able to kind of close off some of the position, leave a trailer, maybe have a moving average, kind of stop trail if you like, that you can hit it out at, maybe start to drag it up as you start to get new highs, that kind of thing. Now, these are all similar themes. You can see it's a continuation type theme, looking for a retest of highs. And also maybe, if you retested the Friday's high and came back to it and held, then maybe the afternoon you might find a further push, or the afternoon as I kind of drew here, but before I crossed it out, sometimes you get a pull back down to the volume weighted average price of the day. All right, so imagine that we now are on day three of a trend. So it's trend day move, but it happens to have happened after a big move, or already we've had a big extension. Something is already quite stretched, and this might be towards the end, or you perceive it's towards the end of the kind of daily chart move. Then really you're kind of looking for the opposite type trade. You're saying, okay, well, I'm not going to just stab short at it because the daily chart is strong, and I don't want to just step in front of something and just put my finger in the air and hope that that's the top of the market. I want to look at it and say, I think it might be stretched. I think we've had multiple days of move. We are probably due a red candle or so. We're probably due a high to low type day. So how do I position for that? Well, one of the things you can do is you can wait for the second test of a high. Now, in my opinion, guys, I think it's better to wait for that afternoon type play, because don't forget, you're still in assume you're in a bull trend here. You're still in a bullish situation. So stepping in front too early is often the wrong play to make. So let it build a high first, let it counter trend, let it retest. So it's the second test. That's often later in the afternoon. You often get the same kind of thing. Then it retests, and then it fails, and then it ends up closing at lows at the end of the day. So the trade is really on the second test of that early morning high in the afternoon. Wait for it to fail, wait for it to come back below, looking to short as it comes back through the high, stops above the high, and with all these guys, you've got to make sure your stops are super tight, especially with this one, because you are trading counter trend. And then what you're looking for on that is that kind of classical red candle, with a little bit of a wick there, that maybe, in the last hour or so of the trading day, especially if we're talking about an index, that's when you get that push. So it's important that you do have that day split up into two. You're not looking to jump on it too early, because you don't know if it's going to happen. This could be that. And what you don't want to do is start hitting it, at perceived highs, and it carries on and on and on, because you end up sitting in a grinding trend day short, which is the worst possible scenario for you. You want to see it hit, you want to see it retrace back, see some supply hitting it. Then don't forget, there will more than likely be a demand. The V-shaped top or that shaped top is less likely, because you're in the scenario. There'll be some demand that comes back in. That then runs out of steam, and the second push is when you go, right, now I think we might end up getting an unwinding. Now, you're not looking for a home run on this one. You're not looking for a kind of, a complete ridiculous retracement. You're just looking for buyers to run out of steam, especially if you're 3 or 4 days into the move, run out of steam and get a nice kind of red close on your daily chart. And that's kind of what you're trying to visualize when you're trading that. So guys, those are a few ways of trading a second, third day trend day play. So if you've missed the initial trend for whatever reason, you can kind of use some sort of scanning tool, or just flick through your favorite charts on your platform, have a scan through the daily charts, see, oh, that was a decent trend day, and then maybe consider looking at some of these, obviously understanding where your risk is and managing your risk and all that kind of stuff as well. But maybe just look at these patterns and saying, okay, well, this possibly is something you could play out on the second day after a good solid move. All right, guys, take care, keep your risk managed, and like I say, check out Call Spreads. There's a link to them in the description below. Call Spreads Australia is the sponsor of this video, and we'll see you in the next one. Take care. Bye bye.